Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we'll see a couple things. First and foremost, we'll see that we had a divided market. The Dow Jones fell and the S&P fell fractionally, while the Nasdaq rose just a little bit. And we can clearly see that the Nasdaq's up 11%. It's up the most for 2012, followed by the S&P 500 and the Dow Jones. So we had a divided market. And we saw on Thursday that the market fell 2%, which was the worst drop since December. And one of the rationales behind that is being a delayed reaction to what happened with the FOMC, which really wasn't much. Again, I think there's a lot of people, especially traders, in the financial market, not necessarily traders, looking for another round of quantitative easing, and they really didn't get a definitive answer to that. Overseas, at the beginning of the week, we had preliminary results of the election pointing towards a pro-austerity group in Greece, so that they're probably going to stay with the euro. And then there's still continued concern about Spain's debt. On the corporate side, once again, JP Morgan's CEO, Jamie Dimon, testified. He left the Senate last week, and this week he was in front of the House Financial Services. What's also interesting about this is that JP Morgan also announced, or it became known, that they've exited about 60 to 70% of their losing positions. And of course, it was theater because the House committee saw what the Senate did and the criticism about the Senate being too nice, and so they were more pointed in their questions to the JP Morgan CEO. And of course, on the economic side, as I mentioned before, the FOMC released their policy. They said they're going to extend their Operation Twist. And all they said about quantitative easing is that they'll consider additional purchases if necessary. They also lowered GDP for 2012 to a range of 1.9% to 2.4%. It used to be 2.4% to 1.9%. I'm sorry, 2.9%. So they almost dropped it a percent. And of course, we do have GDP numbers coming out next week. So, nothing as far as stimulus, nothing as far as, it's also important that the FOMC said, we've done our job and we're doing all that we can, but it would be nice if we had help in reference to policies from Congress. So hopefully Congress will listen. As we move forward to our next week, we do have REM as far as earnings. So we'll see what BlackBerry's doing. As far as economic, we do have consumer confidence, we have consumer sentiment, we have GDP. So we do have some things coming up. We are entering the last week of June, which means we'll finally have a new set of earnings coming up here in July with, of course, we know Alcoa. So we'll be talking about that next week. Let's pull up the charts. All right, so as we look at our market sentiment leaders, the dollar, gold, and crude oil, we see a couple things. Gold, the dollar here did rebound a little bit. We'll zoom in a little bit. And we can see that it came down and found support last week. We talked about the support at 81. It did find that, and now it's going back, retesting the highs. So the dollar is definitely sideways up, but notice that we do have a little point of control here just above 82.8. So be interested to see, but you can see a lot of volume has accumulated in here also. So be interested to see if we can get back up here to 83. But definitely the dollar is sideways up. What does that mean for gold? Usually there's an inverse relationship. And we can see that gold did fall off a little bit here. As the dollar, last week the dollar was down, gold was up. This week the dollar is up and gold is down. Back down here around 1560. A lot of accumulation in here. You can even see that on our market profile. So gold sideways. This is where typically we have found support, 1530 the lowest. So I think we're okay around support, but no real trend to trade. And finally, crude oil. I saw an article that said maybe we'll see 250 again in gas. How about that? I come over here first to show you some wicks where we found support. And so this week, when we got back down into that $77 range, we did find a little support here. So gold is still down. Sideways are down at best, but definitely down. But again, longer term, the 77.50 is where we found support for crude oil. So we are looking at now the daily chart of the S&P 500, and you can kind of see that big down day here on Thursday. You really could start drawing, a trend line up here. Just to notice, but you can see also that the market is trying its best to defend that 1330-ish resistance support line here, excuse me. So we're starting to see a wedge form here. Again, the market's going to have to break above 1375, 1370-ish, or it needs to break below 1320, come down here, hit that 200 moving average. So we're seeing a little wedge starting to form right in here, coming down and coming up. And we are going to come back into some catalysts. Next week we do have a little bit going on with some of the consumer confidence and consumer sentiment. But we know following that, we're going to have job numbers. And then following that, we're going to get right back into the earnings season. So we are going to come into a little catalyst, although we know that trading is lighter during the summer. We can see on the daily that our indicators, although in the middle here for RSI, our MACD and stochastic want to head back down, coming out of the overbought. Now we'll go out to the weekly, get another look at this, and we will see, zoom in for you, an indecision candle, a doji candle. So we had a nice second week of June, but our third week here was not able. We ran into resistance of that 1370 that we talked about before, and we pulled right on back. But we are a little bit oversold here, or in the middle of nowhere. So I will say the consistency we're seeing is indicators primarily being in the middle of nowhere, but we have a little divergence. We had stochastics overbought on the daily, oversold on the weekly. Zooming in one more time here as we zoom out to the monthly, and we can see that potentially setting off falling three pattern here, a little doji candle here. And once again, our indicators are in the middle of nowhere, a little bit overbought. Go back to the daily and switch over to the NASDAQ, which, remember, had a good week this week, or had a positive week, I guess I should say. And there we are, defending the 1386 price level here, defending that. We fell in the middle, and notice, where did we fall? You see these three candles in here? Where did we fall? At this 2930 price level. Our swing low right in here, 2940. You can even get some price action in here. So it's not surprising to see that this is where the market fell. What was once support here is now resistance. So that's our target. We need to get above 2940-ish, 2945 to see some movement. Again, stochastic overbought, a little bit in the middle of nowhere there. We'll go out to the weekly. And in the weekly, we'll start to see kind of a double back-to-back doji here, a little indecision here on the NASDAQ. And our indicators are in the middle of nowhere, a little bit oversold on stochastic, coming all the way out to the monthly. Sorry for that little delay there. We'll zoom in, and again, potentially a falling three, but not so bad. Not so bad here. At least it is fractionally above the swing highs here. So that's certainly good. But our indicators in the middle of nowhere here for RSI, coming out a little bit overbought for MACD and stochastics. So here we are looking at Apple, and even though we're seeing a ever fractionally move upward, you could also make an argument that it's going sideways. So Apple, I'm going to say sideways up. Notice we got our point control at 571, 572-ish. But we got another thing going up here at 586 that we've just gotten below. Apple sideways to up. Amazon. Let's take a look at Amazon. Again, had this nice earnings move, came back up, and now it's staying above 220. So I can say sideways, maybe sideways up there for Amazon. You can see nicely here on the hourly chart above the 217 point of control. Sideways up for Amazon. Facebook lives. Really nice move. I'm not even going to go down to hourly. Certainly Facebook has survived here, but now it's come up to our resistance at $33. If we break there, we're now starting to take out this gap down action right here. So Facebook sideways to up. Facebook sideways up. How about that? Google. We were a little negative on Google last week. Let's zoom on in here and see what we got today. Seems to be still in this range of 560 up to 580. You can see why we're negative. Came right down here and was sitting here. Went up to that resistance of 580 and back down. So sideways, maybe even sideways to down for Google. Goldman-Sachs. Obviously, we've been in a downtrend after that great move. So, but now we're just kind of going sideways. So I'll say sideways for Goldman Sachs, maybe even sideways to down. IBM. IBM tried to get out, but pull right on back with the market. That Thursday really hurt IBM. Just going to say sideways. Hopefully we'll see this 200 moving average act at support again around 192. Intel. Intel usually works right with IBM. You can see how Thursday helped there or hurt there. Now we got to see if we can get back above 27. Sideways on Intel. MasterCard. Zoom on in here on MasterCard. MasterCard is above its resistance, so now support of 420. Getting into this consolidation area in here, as Friday was a good day for MasterCard, but you see it's getting in this choppiness. We really need to get above 440 to start testing the highs. Netflix, falling. Goldman Sachs kind of just doing nothing, so sideways, even though we got a little double bottom in there, and we got to move off of that. But sideways for Netflix. And finally, Priceline. Priceline found a little support here. I thought I was going to fill this gap. Came really close to filling this gap. You look right here. Real close. Went all the way back up here to 680 and has died. So sideways for Priceline. As we come to our education spotlight, we're going to talk about the 3 stages of a consistent trader. And, and this is, the way a new trader transforms himself into a profitable, consistent trader. And of course, the first thing is being able to, or not able to, recognize a pattern. Now, that could be a chart pattern, that could be an indicator. There are patterns, there are systems, there are setups. Whatever word you want to use, of course, the first step is you don't recognize it. The second step is being able to identify. And this is where some traders lose their big money because they see the patterns, but they're unable to, which is what the third stage is. Not only do you have to be able to recognize a pattern, but you need to take action, specifically the right action. I always share a quote by Ron Iannari that says, the job of every trader is to recognize opportunity and then apply the right strategy. It's one thing to recognize a pattern. It's another thing to apply the right strategy to that pattern. You can see double tops, M's, head and shoulders, sending wedges, whatever chart pattern you like, or you might see some price action, swing highs, swing lows, indicators, acceleration, deceleration, MOBO, whatever it may be. But it's another thing to apply the right strategy. What are you going to do with the pattern that you recognize? And that's how you differentiate a consistent trader and a losing trader, because a consistent trader has a rules-based, criteria-based system on what to do once they see a pattern, whereas a losing trader typically allows emotions to get the best of them and potentially take the wrong action. So not able to see the pattern, able to see that pattern, and then being able to apply the right action to the pattern is the 3 stages of a consistent trader. As always, we hope that you'll take the time to comment, like, or subscribe to us on YouTube or Twitter. We have our page on Facebook, Are You Financially Literate? And we have our mentoring programs, our managed forex accounts, and of course we have a little tip here for our stock traders. Again, we do have something exciting coming for us here right after the 4th of July. We have a new service that I'm really excited to share with you, so I'll be sharing with you next week about our new service. I've been asked for years to do it, and so we're going to be doing a new service for you here following the 4th of July. No matter what service we provide or anybody else, you have to be able to make your own educated decision about, and your own discernment about what you're getting. Is it right for you as a trader? That's where so many traders lose their money. They take information and they apply it as given instead of taking information and apply it to their trading style, to their budget, to who they are as a trader. We can help you do that through our mentoring program. Thanks, guys, and I'll see you next time.